Hi, I'm Mike with Fusco or Associates. And in today's video, I'm going to talk about the cost of employment practices liability insurance, commonly referred to as EPLI in the state of California. Here's a few facts I want you to consider before I start talking about EPLI. Number one, California is a very litigious state. Number two, labor laws in California heavily favor the employee. And number three, the COVID-19 pandemic has forced many companies in California to reduce their workforce and lay people off. Now, why do I tell you this? EPLI, whether on a standalone basis, and when I say standalone, I mean purchasing EPLI as its own policy, or as part of a package or business owner policy, has become very difficult for businesses to secure over the course of the past 2 years. Now, if you're talking about EPLI on a standalone basis, meaning you're going out and purchasing an EPLI policy on its own, here's a few things to consider. Number one, premiums have increased 20 to 25% on average in the past 2 years. Retentions have increased drastically in the past 2 years. What do I mean by this? In the past, we were able to find retentions starting at $1,000 to $5,000. Now we're seeing those same retentions at $10,000, $25,000, $50,000, and $75,000, regardless of your industry. If you're in an industry such as hospitality, you can guarantee that those retentions are going to start at a higher level than they have in the past. Also to consider, sublimits have become more prevalent. Sublimits mean that the carrier is going to take certain sections of your policy or certain sections of coverage and reduce the limits down to a certain amount, such as $50,000 or $100,000. It's common that we see sublimits on wage and hour or FLSA coverage. Now, if you have sublimits there, we've even seen sublimits at $150,000 with a $50,000 retention only for the wage and hour claim. So again, more restrictive coverage, higher retentions, higher premium. Same goes for exclusions. Many carriers now are altogether excluding wage and hour claims or immigration law claims in the state of California. So it's a very difficult market. If you're looking to add EPLI on your business owner policy or commercial package, you're going to fill out an application and the underwriters are going to look it over. They're going to want to see what type of employee handbooks you have in place, your worksite policies. Have you had any reduction in labor or layoffs in the past 12 to 18 months? What are your financials looking like? They want to know if any of that stuff is to come, if there's going to be any significant drop or layoffs coming in the future. So all of this is in consideration when underwriting an EPLI policy, both on a standalone and on a package policy basis. Now, if you're serious about securing EPLI for your business, you need to find an agent or a broker who understands the marketplace. Right now is a very difficult marketplace. It's tight, it's restricted, and you need an agent or broker who's going to be able to understand the policy limits, the retentions, the sublimits, the exclusions, and also how to properly set you up for the policy going forward for success. Now, if you don't know the difference between a retention and a deductible, I mention retentions in this video often. Self-insured retentions are much different than a deductible. I explain that in other videos here on my YouTube channel. I recommend that you search and find those. If you want help from a company or an agent or broker that really understands the EPLI market, especially in the state of California, we've been dealing with it for many, many years, give us a call here at Fusco or Associates. Our phone number is 858-384-1506. If you're a current client of our agency, reach out to your broker or account manager. They can help you quote or set up an EPLI policy if you want to protect your business for these types of claims going forward. Thank you again for watching, and we'll look forward to seeing you on the next video. Take care.